Hi everybody, Alex here from Expert Forex, and in this video we're going to be looking at the secrets why Martingale can print and print money. Now, why do I say that? And on your screen you can see a portfolio of 24 Martingale accounts, and you can see how well they're doing. They've generated $70,000 profit, and the drawdown currently is only $6,000. So it's really doing extremely well. It only trades two main currencies, and this portfolio has been trading for 103 days. So this is the success I'm talking about, and what we're going to be talking about this is the secrets why this Martingale approach is doing so extremely well. And here are some more details about that portfolio. You can see that the accounts that have got links in front of them means that they have been included in our link to success service. So participants in that service can link their accounts to these fantastic accounts and experience similar results. And you can see the fantastic results that we're looking at here. I always look at equity because that's the actual wealth number, because it takes open trades into account. And you can see that two of these accounts have more than doubled themselves over the last 3 months. Fantastic achievement. And the reason why it's so slow is that we are conservative. Martingale is a very aggressive technique, and we're trading pretty conservatively. And here's a further look at that successful account. You can see it's made 132% return over 95 days, and it has traded the euro pound. But we'll look at this account in a lot more detail as we go through the video. So we're going to look through 10 secrets. Now, the thing with this strategy, all the 10 secrets have to be aligned for you to be successful. You can't just say, oh no, I'll just focus on this particular secret. All the secrets must be aligned, and that's what makes this technique so successful. So we look at firstly the psychological frame of mind. Firstly, you have to go into this one with a very open mind, with a very optimistic mind. You cannot entertain any negative thoughts, and I'll talk a little bit more about that later on. Then you need an understanding of the basic trading logic, and I'm going to give that to you straight away now. So Martingale is a technique where a gambler goes into the casino and he puts $1 on red, and unfortunately black comes up, and then what he then does, he puts $2 on red, because if he's successful, he pays his loss with the one, and he still walks away with a gain. So again, he loses that bet. So what he now has to do, he has to put $4 on, because he has to pay his $3 loss and still make a profit on the other one. So he puts $4. If he makes a loss there, then he moves to $8. Makes a loss there, he goes to $16. So what he's basically doing is doubling his bet every time. That's Martingale. So that's the logic behind the system. Then we're going to look at which currencies are best used for this approach, what account size you need, what position size you can start with, and that is the one where the Martingale obviously applies. You then double up on that position size as you're going on. Now, here's one of the big secrets, is the gap size. So how often do these transactions take place? If the first transaction takes place, how many pips later will the next one take place? And that's generally regarded as the gap. So the gap between the first and the next transaction, that is what we call a gap. Just for example, if the gap is 10, we're going to apply Martingale to the gaps too. And that's what makes this system so successful, because the gaps will go from 10 to 20 to 40 to 80 and so on. So it also uses Martingale to increase the gap sizing. There's also hedging involved, and I'll show you that when we look at the actual robot that is used for this trading. And then there's a special robot that we're giving away for a 30-day trial. You can actually use it for free for 30 days. Use exactly the strategies that I'm going to show you in this video, because I want you to get so excited about the results that you're getting from this approach that you can then use the robot into the future. Then we're going to have to look at the settings for that particular robot, and then we're going to talk about money management. But as I say, all of those have to be aligned and be in place for the whole strategy to be successful. Okay, so one of the points there is currency selection. Now, because we don't want the price to run away with us, we don't want this doubling up and doubling it up and doubling it to occur too often, we want to use the lowest volatility and the lowest trendy currency. So here, if you look on this particular tool, it's called the Trend Analyzer, and it actually looks at the length of trends experienced by the currencies. And just looking at the top one there, the Euro Pound, that is in fact the currency that we mostly trade. It has a 64 pip buy trend on average, a 70 pip sell trend on average, and then on average it has a 67 pip trend. So that's quite low. The highest trend it's experienced in the last 40 trends is 207. So we've got an idea of the range that this currency trades. And then if you look down, you'll see some really big numbers coming out, and we want to stay away from these big numbers. You can see the metals, the crypto, the indices. They all have very high volatility, very high ranges. Now, you trade those with trending EAs, but this EA that we're going to be, the Martingale one, is actually a sideways one. We just want the currency to go up and down in a small fashion rather than trend. So that is why we focus on these low trendiness currencies, and that is why this tool is so very important. It measures the trendiness of a currency and updates it all the time. This is a free download. I will give you a download link in the description of the video as well as in the commentary. So now you know the currencies we use are the low trendy currencies. And here is the EA that we use. It's the Lucky Trader. It is a EA that guarantees 100% success at increasing your account balance. So it's fantastic EA, and as you'll see, it is ideal for this Martingale approach. Just go to this page and there will be an opportunity for you to do a 30-day trial. Okay, and here we are on one of the platforms trading this particular EA and trading the Martingale approach. And I'm going to go through a lot of detail on this particular one. You can see here's the actual EA loaded. Here is an FX Blue publisher that actually pushes the results to the linking service and to our portfolios. And here are the actual settings that are used by the EA. And I'm going to go through those settings very carefully because it's important that you understand the process that happens here. And then if we look down here are the open trades that are currently experienced by the EA. And here you can see there are 3 buys and 2 sells. And that's where the hedging comes in. It trades the 2 legs independently. So when there's a sell transaction, it responds to that. If there's buy transaction, it responds to that, and that is when you get the hedging situation. So there we are, and now we'll be able to see Martingale in action, because the first transaction was at 0.4, then it went to 0.8, and then it went to 1.6. And on the sell side, the same thing. The first transaction was 0.4, and then the next was 0.8. Now the same actually happens on the gap size. So the gap size starts in this case at 10, and it increases in the same way. So here you can see the first transaction went from 19 pips to 9 pips, so there's a 10 difference. Then it went to 89, which is a 20 pip difference. So you can see that in action, and then the sales haven't really progressed they're only at 10 at the moment. So what we're doing is we're applying Martingale not only to the lot sizing, but to the gap sizing. Very important. So let's have a look. Now the settings will make a lot more sense. So the first question is what kind of gap size do you want? We put in 10 year. It's a very small gap size. It's safer to put in, let's say, 15 or 20, but we're pretty aggressive with this technique, and I'll explain why 10. So it says when do you want to start scaling up? We say immediately. That's why there's a 1 there, and we want to scale by 200%. So in other words, 100% stays the same, 200% doubles the gap size. So the gap size will go from 10 to 20, and then from 20 to 40, then from 40 to 80. So it keeps on doubling up. And then it asks, don't worry about that setting. Then it asks for the initial lot sizing. So at the moment we've got it at 0.04. Now immediately I must add that these settings are for a $10,000 account. So if you have a $1,000 account, then all you put in is, instead of 0.4, you put in 0.04, and then suddenly the settings will work for a $1,000 account. So there's the 0.04, and then it says the top-up multiplier is 2. So the factor is 2, so it's actually doubling every time, the lot sizing every time it reaches a gap size. So it will go from 0.4 to 0.8 to 1.6, as we've seen below. Then the next main questions that it asks is what kind of take profit do you want, and you see there's 50 in there, but that means nothing, because below there's the hidden take profit, and that is because we put a big number in for the broker to see, but we use a small number, and that is set for 10 at the moment. So when it reaches 10 per profit, it will cash in. That's for the initial trade. Now if the initial trade isn't successful, it will open a second phase, and then it creates what we call a basket of trades. And then the next question asks, do you want to use a buy and a sell at the same time? And we say definitely we want to have a hedging situation. And then it says, okay, well, how are you going to manage the baskets? And here we say we want to close the baskets when the results are at $90. Now I'll give you an example of that. If you look down here, the sell batch has a profit of 74 and a loss of 12, so it's now minus 62. But when it reaches 90, those will be closed and a new sell opened. And you can see here it's already worked the take profit number out that needs to result at a $90 cash in. So it's very close to that $90 cash in. There is the target being highlighted in green, showing that it's close to the target. So and then let's have a look. There's nothing much more. There is an element of pruning that happens. I won't go into that. So far that hasn't really played a role in the Martingale trading. So those are the main settings that there are, and this hopefully has given you an idea of how simple this technique is. It's basically just doubling up on gap sizing and doubling up on lot sizing and giving an initial target and then a batch target. So it's very, very straightforward. It's not a complicated one. And here's an example of it trading live. So let's move on. Now what we've done is we've supplied you with actual settings. What we're doing is we're testing this on 24 accounts, but the 24 accounts are traded by different robots. So the lucky trader is trading the first 10, then we have the wave liberator trading, the RSI liberator trading, then we have the profit retriever trading the rest. So we're actually testing 4 EAs, and the lucky trader appears to be the most robust of the 4, and that's why I'm only promoting that one in this video. But here are the settings. They give you the time frames, they give you the start balance, and again, if you want to use a $1,000 account, you just divide the lot sizing by 10, and you also the closure take profit by 10. But there we are. When you download the Lucky Trader for your 30-day trial, those are the settings that you need to use. And don't even worry about changing them. Use them as they are. Okay, then just a very quick discussion on money management. There are three approaches you can use. You can either trade your account on the same settings all the way through, and that's most probably a good conservative way of doing it. Or what you can do, the second way, is you increase the lot sizing as your account goes up. So if your account goes up by 50%, you increase the lot sizing by 50%, and then that batch target number by 50%, and therefore you'll gain more as the account grows. The other approach is the cash cow approach, and that's one that I've used throughout my career as a trader, in that what I'm trying to do is I'm trying to make my accounts risk-free as quickly as possible. And by risk-free, I mean if I've allocated $10,000 capital as risk capital to trading, and I make a $10,000 profit, then I draw that 10,000 out immediately, because then it means my original capital is risk-free. I can't lose it anymore. So that's the cash cow strategy. Doesn't matter which one you use. I think all three have merits. Okay, so let's just go through the 10 secrets. We've discussed the psychological side, and I'm going to discuss that a little bit further now. We know how the logic works, the currencies, low volatility, low trending currencies, account size that's given to you, either 10,000 or 1,000. Position sizing is subject to Martingale. Gap sizing is subject to Martingale. Hedging happens automatically within the Lucky Trader. The trading robot is supplied to you, so you can use that. It has the hedging built into it. We've looked at all the special settings, and we've discussed cash management. So we've really done what we set out to do in the video. Okay, so now over to you. What actions do you need to take? Firstly, download the free 30-day trial of the Lucky Trader. Fantastic, EA. Download it, and it will only run for 30 days. It cannot run on live accounts, but it is not meant to. It's meant for you to experience these trading strategies. Next is to open a number of demo accounts. So what we want you to do, we've supplied you with 10 strategies. Trade them all. Open 10 accounts and then trade them all. See what you experience. Very important, because if you at the end of 10 days experience 10 beautifully positive accounts, then your level of confidence will go through the roof. If you only trade one account, then you don't know what would have happened with the other strategies. So set those strategies off and just leave them alone. Don't fiddle with them. Don't do anything to them. Leave them alone for the 30 days. And then at the end of the 30 days, be surprised by the fantastic results that you will see. Now here comes part of the psychological side. And this is why the theme of this video has been secrets. Don't share this secret with anybody. Now there's a reason why I'm saying that, because if you start talking to people, if you go on forums and discuss this technique or anything like that, all that will happen is you will be exposed to cynical people that will try and tell you why the technique doesn't work. It will fill your mind with negative thoughts, and you will start fooling around with the strategies. So please keep this a secret to yourself. Trade the strategies in secret on your own. And when you experience these fantastic results after 30 days, keep it a secret, because you don't want people asking and debating and over-analyzing the strategies and creating stress in your mind about these strategies. They're pretty simple, straightforward ones, but they need to be traded. Trading is like swimming or playing golf. You cannot sit around and talk about swimming and think that you're going to learn anything, learn how to swim by just talking about it, or talking about golf and think you're going to be a fantastic player if you haven't even gone onto a golf course or onto a practice range. So trading is exactly the same. You have to apply yourself. And I hope you've enjoyed this video, and I hope you take this opportunity to experience really substantially good results, and that you follow those actions that I've outlined. As always, the links to anything mentioned in this video will be in the description of the video, as well as in the first commentary of the video. So from me, Alex Eploy, cheerio.